La RSI est une réserve de fonds propres qui permet aux 6 banques d'importance systémique intérieures du Canada d'éponger les pertes et de continuer à accorder des prêts aux ménages et aux entreprises en période de tension. Aujourd'hui, nous maintenons le taux de la RSI à 3,5% du total des actifs pondérés en fonction du risque. Notre décision s'appuie sur les différents facteurs suivants. Les vulnérabilités systémiques sont stables mais élevées. Et selon le BSF, le taux actuel de la RSI, soit 3,5%, est proportionnel aux vulnérabilités systémiques. Les risques à court terme restent gérables et les banques du Canada continuent de faire d'importants bénéfices malgré un contexte difficile. Grâce à leur solide position de fonds propres, les banques d'importance systémique intérieures du Canada sont en mesure de soutenir les ménages et les entreprises au fil de l'évolution des conditions économiques et financières. De plus, puisque les vulnérabilités systémiques sont stables et dans certains cas plus faibles qu'avant, le BSF ne s'attend pas à abaisser le taux de la RSI à moins d'un changement important des vulnérabilités. Le BSF est d'avis que la fourchette de 0 à 4% convient à des scénarios de stress sévères mais peu probables et nous permettrait de réagir si les vulnérabilités venaient à s'intensifier ou à diminuer. Le BSF a délibérément haussé le taux de la RSI pour accroître la réserve au fil du temps et ainsi garantir que les grandes banques canadiennes aient la résilience nécessaire pour soutenir le système financier en période d'incertitude. Ainsi, les grandes banques canadiennes détiennent les niveaux de fonds propres élevés. Leur ratio de fonds propres de catégorie 1 sous forme d'action ordinaire, ratio CET1, est supérieur à notre attente de 11,5%. Le taux de moyenne est à 13,6%. La RSA est une réserve équilibrée de fonds propres version canadienne. Contrairement aux réserves de fonds propres contracycliques en vigueur d'ailleurs, le non-respect des exigences de la RSA n'entraîne pas automatiquement des restrictions sur les fonds propres comme une baisse des dividendes ou l'arrêt du rachat d'actions ordinaires. Si une banque ne suivait pas les exigences de la RSI, le BSF s'attendrait à ce qu'elle lui fournisse un plan de mesures correctives visant le retour à une réserve de fonds propres qui excède le plancher prévu par la RSI. Des restrictions automatiques sur les fonds propres ne seraient imposées que si la banque contrevenait au montant minimal de fonds propres qu'elle doit détenir, c'est-à-dire que son ratio CET1 serait inférieur à 8%. Les banques détiennent un coussin non négligeable de fonds propres qui excède le taux et la fourchette de la RSI. À l'heure actuelle, elles détiennent plus de 60 milliards de dollars en exclus du plancher CET1 et de le RSI, et plus de 45 milliards en excès de la fourchette. Les institutions déterminent l'utilisation qu'elles veulent faire des fonds propres qu'elles ont mis en réserve. Elles disposent de nombreuses options, par exemple, elles pourraient augmenter l'accès de crédit aux entreprises canadiennes, y compris aux petites et moyennes entreprises. Nous continuons de suivre de près les vulnérabilités et les risques, y compris le niveau élevé et croissant d'endettement des ménages, l'incertitude sur le marché de l'habitation et de l'immobilier commercial ainsi que certaines difficultés dans le secteur du crédit, comme l'augmentation graduelle des incidents de paiement et des provisions dans certains segments du crédit commercial et à la consommation. Ainsi, l'abaissement du taux de la RSI ne doit pas être perçu comme une nouvelle information ou une prévision pouvant perturber le marché, mais plutôt comme un ajustement normal en fonction de l'évolution de la situation économique. Nous continuerons de suivre et de près et nous rajusterons le taux de la RSI selon les conditions. Merci beaucoup. Je passe la parole à Christina pour des questions. Christina, over to you.
Merci, Surintendant. Please note that the superintendent's remarks are now posted to OSFI's website in English and français. All right, so a few notes before we go to questions. I just want to note that the event is for registered media only. A reminder that OSFI officials cannot speak to the impact of today's announcement on specific institutions. We'll do one question and one follow-up, please. Une question et un suivi, s'il vous plaît. Alors, if you want to ask a question, please raise your virtual hand using the Zoom React button at the bottom of your screen, and I will call on you to ask a question. Si vous voulez poser une question, veuillez lever votre main virtuelle en utilisant le bouton de réaction Zoom au bas de votre écran et je vous nommerai pour poser votre question. Perfect. So we've got a question from Stephanie Marotta at the Globe and Mail. Stephanie, over to you.
Hi, Peter. Thank you for taking the time to chat with us this morning.
Hi, Stephanie.
So some analysts and others in the industry have said that OSFI should lower the DSB to bring Canadian banks in line with international standards and to give banks flexibility to lend and help the economy withstand trade and productivity issues. So do you agree that the current level in part restricts lending at the banks, in particular in industries and business sectors that are key to boosting the economy?
Thanks for the question, Stephanie, and glad to answer it. As I said in my prepared remarks, the systemically important banks are holding capital well in excess of the DSB implied minimum floor for capital, which is 11.5%. They're sitting at 13.6% on that ratio. Now, if you sort of look at that and say, well, how much capital do they have above at 11.5%? That's 60 billion. And if you go even further, you say, well, the range is 0 to 4%, implying the DSB could produce a floor as high as 12%, conceivably. They're still holding capital at 45 billion in excess of that sort of range implied floor. Moreover, we stated pretty clearly in my remarks, we don't intend to raise the DSB further unless risk vulnerabilities materially intensify. So it seems to us that the answer on the basis of those facts and that evidence is no. We think Canadian systemically important banks have ample capital capacity continue to grow and profit from their growth.
So even with that in mind, some have pointed out that the capital requirements are still significantly higher than those of the banks or the US G-SIBs in the States and the competitors to the Canadian banks. So how do you see this affecting Canadian banks' ability to compete?
I would not necessarily agree with that premise. As I mentioned in our remarks, the way we run our capital buffers is to create a more flexible principle-based buffer called the domestic stability buffer that does not imply any automatic capital restrictions if breached. Certain stress testing implied buffers in some countries or counter-cyclical capital buffers in other countries oblige automatic restrictions in capital distributions well above our 8% floor. So in Canada, the banks, yes, the banks have a high DSB meant to sustain resilience through an entire economic cycle. That is certainly true. And that's of benefit in the long term to the financial system and the economy if they have that resilience built in. But the notion that that resilience is more restrictive than in other countries, in our view, is not really supported by the evidence.
Thank you for your time, Peter.
Thanks.
Thanks, Stephanie. All right, up next we have a question from Nivedita Balu. Nivedita, please go ahead.
Good morning, Peter. Thank you so much for taking my question. I want to ask about the factors that you're considering in 2026, especially as the trade negotiation comes up, and you say there's a lot of uncertainty that's also shaping the risk environment. In the perspective of the Canadian banks, looking at U.S. as for growth, the presence in the U.S. is continuously increasing. I wonder if that's something that you factor in while setting the DSP or potentially lowering in 2026.
I mean, I think it's fair to say, Nivedita, and thanks for the question, that as we've thought about the DSP through the course of 2025, the additional uncertainty created by trade tensions, certainly with our largest trade partner, has been a consideration and has informed how we've thought about it. Having said that, if we go back a year when this uncertainty began, and we compare what we thought the range of potential outcomes were a year ago, and we look at where we are against those outcomes, we're well into the better than we expected range of outcomes. In other words, where we are right now is a lot better than we had feared we might be as an economy and as a financial system. And so for that reason, and for the other reasons I cited, we are sustaining the DSB at its current level. If conditions deteriorate, if uncertainty rises and creates economic disruptions or financial market disruptions, we are prepared to lower the DSB.
And a follow on that, on the corporate debt side, so you do mention the Canadian corporate debt side, but I'm also curious about the growing US business. That's also adds as a factor, I'm assuming. So how would you look at the US corporate debt the Canadian banks hold?
Again, and this is a feature of the DSB. The DSB we apply to the overall enterprise. It is measured at a consolidated bank level. So wherever we set the DSB, it doesn't really affect any region differently. We apply the DSB to a single institution regardless of its geographic footprint. So to the extent we raise it or lower it or hold the same, the effect is the same across the enterprise and therefore across borders. So in effect, our capital setting approach is fairly agnostic when it comes to geography. Now, banks may make particular decisions about where to invest their marginal dollars across geographies. That's up to banks, senior management, and boards of directors, not OSFI. We try to be geographically agnostic.
Thank you so much.
Thanks.
Perfect. Thank you, Nivedita, for the question. Next up, we've got a question from Shaimei from The Logic. Please go ahead.
Hi, Peter. Good morning. Hi, everyone.
Morning.
Thank you for talking to us today. My question would be, is OSFI concerned about banks accumulating so much capital instead of expending it and making sure that that money goes into stimulating the economy?
It's rare. Thanks for the question. It's rare for a bank regulator to complain about abundant capital in its financial system. If you had the choice between abundant capital and not abundant capital as a bank regulator and supervisor, you choose abundant capital. So no, we are not concerned about abundant capital. We do point out that one of the benefits of building the capital cushions, one of the benefits of building our DSB up, is that if economic and financial conditions deteriorate in 2026 or in another year, the system has ample capacity to adapt to that, to absorb losses, and continue to provide credit to businesses and to households.
Thank you for saying that. And a follow-up would be, is OSFI satisfied with how the banks are using that excess and that abundant capital?
And I'm not going to actually give you a yes or no answer, not because I don't want to, but because it's not OSFI's position or job to make that decision. The decision over what to, and I think I mentioned it in our prepared remarks. The decision on what to do with capital capacity is a decision for institutions, by which I mean boards of directors and senior managers, provided they make those decisions in a manner that is risk intelligent, doesn't unduly put the institution at risk of serious loss of capital. We have no other point to make on that. The allocation of capital is rightly remains with boards of directors and their senior management teams.
Thank you. Appreciate it.
Perfect. Thank you. All right. Up next, we've got Anna Pereira with the Toronto Star. Anna, please go ahead.
Good morning. Good morning, everybody. I'm wondering, Peter, how do you expect recent return to office mandates to impact real estate related risks for the Canadian banks and the financial sector as a whole?
Well, I think it's fair to say that there remains uncertainty about how office mandates or additional office mandates will roll out, and then how people and institutions will react to them. However, having said that as a disclaimer, as a proviso, as actual occupancy in commercial, industrial, etc. buildings increases, that will tend to, all else equal, increase the cash flow that those assets produce, which will, all else equal, tend to improve the asset quality of those assets. So from a prudential perspective, it would tend to improve the quality of assets, all else equal, on bank and insurance company balance sheets, and we would not be disappointed with that outcome.
Right. And actually, my follow-up question is a totally different question.
Okay.
I wonder how you're viewing the impact of the Toronto condo crash on the Canadian financial sector.
Yeah, I think it's fair to say we look at the housing market and its effect on residential credit every day with acute level of detail, and we are very focused on parts of the market that are showing stress. And I think it's a fair statement to say that the condo market in Toronto is showing a fair amount of stress. Well, we have seen rising delinquencies and some rising credit costs within geographies that are stressed, like Toronto condos, both in terms of residential real estate and commercial real estate. The costs we're seeing are not a major, certainly not a major strain on capital, and only what we would characterize so far as a minor strain on earnings. So while not wishing to minimize the strain and the stress that folks in that market understandably feel, those costs are not presenting a material threat to either earnings or capital in our financial system.
Just a quick follow-up on that. Did you consider the Toronto condo crash as part of your decision today?
What we consider, and we have the decision note out, and it shows you a variety of indicators that inform our thinking. We consider overall real estate markets and specific real estate markets within a broader array of factors. No single factor will trigger a DSB decision one way or the other. It would take an accumulation of factors to cause us to either raise or more likely lower the DSB.
Thank you.
Perfect. Thank you, Anna, for your questions. Next, I will turn it over to Christine Dobby with Bloomberg. Christine, over to you.
Thank you. Good morning, Peter.
Morning.
OSFI is proposing changes to the risk weightings on certain types of loans, particularly to small and medium businesses and some real estate loans. And you've talked about this as meant to help the banks, help the economy at this, very sort of fraught time that we're all living through. But this will take some time. I understand the consultation is ongoing.
Yeah.
I think you've touched on this before with us, but can you talk again about why you don't see the option of lowering the DSB as a faster means of getting to a similar result?
Yeah, thanks. I'm glad you asked that question. I mean, we make the DSB on the basis of risk indicators, not on the basis of credit growth in one sector or another. When we think about credit across sectors, the more important factor is relative risk weightings. And what we've tried to do is look specifically within our standardized approach to capital and ask, does the standardized approach for capital make sense for small and medium-sized banks who want to lend to small and medium-sized borrowers? And what we've concluded in consultation with those regulated constituents is that we can rebalance a little bit the capital within that system in order to enable them to compete more effectively and, if they so choose, provide lending, to small and medium-sized business enterprises. Another point to make in relation to the DSB and lending more broadly is, and I come back to our comments, the capital in the system well exceeds the DSB implied floor, well exceeds a floor implied by the full DSB range. As I said in my opening statements, we do not see the Canadian systemically important banks as capital constrained at this point.
Can you talk about whether in your conversations with the banks, you've had discussions about why they're holding on to so much capital above the
Actually, I've never asked a bank senior executive or board member that question. Our conversations are basically, here's the floor we think is safe given current conditions. Glad you're well above it. Over to you on how you want to allocate that capital. We have never had that conversation by intent. We don't see it as a regulator's position to in any way participate in a board of directors or senior management team's decisions about the allocation of capital. So as banks make decisions to allocate capital through more lending, through return of capital to shareholders, whatever the allocation may be, it's their decision. They're held accountable for it by their shareholders.
Got it. Thanks for the time.
Thanks.
Thanks, Christine, for your questions. Next, we'll turn it over to Ian Bickus with the Canadian Press. Ian, over to you.
Morning, Peter. Thanks for taking my question. I know you've mentioned a couple of times that banks hold well above the required amounts now, but do you think that banks would lend more if you reduce the buffer?
I mean, the simple question is that's a question for the banks themselves. However, they're currently running with a fairly sizable buffer on top of our buffer. And so maybe an interesting question is, why are those buffers so large? We've been very clear about the DSB. It's 3.5%, which implies a DSB floor, a capital floor for DSIBs of 11.5%. We've also stated publicly, and I'll state again, if a DSIB is running a CET1 ratio of 11.51% or more, I'll have no issues with OSFI. If they fall to 11.49% or lower, a conversation begins and a remediation plan will be built at our request. But beyond that, banks are running capital well in excess of that threshold. We're certainly gratified that we have that capital in the system, particularly given the uncertainties out there. And how boards of directors and senior managers choose to allocate that capital is up to them.
And then in terms of, I know it's financial stability is kind of look at the risk side, but kind of factor in the risks of lower economic growth. How much do you weigh that side in terms of leaving the stability buffer where it is and not kind of anticipating kind of lowering it to kind of reduce the longer term risk of low economic growth?
Well, I mean, we rely on, in particular, our colleagues at the Bank of Canada for economic forecasts, and they've been quite helpful to us in terms of providing a range of potential outcomes and then providing an overarching forecast in their monetary policy report, which does suggest a continued period of slower economic growth tied to trade tensions. And as I said in my remarks and in answers to earlier questions, the economy is doing better than we feared, the OSFI feared 12 months ago. And the impact on the financial system, and in particular, which is our responsibility, has been quite moderate, quite modest. There is rising gross impaired loans, there are some rising provisions, but these are cyclical and quite absorbable within current earnings. Those are all, that is an outcome on the upper end of outcomes that we were hoping for. As we move in, if growth slows, we do have the DSB lever, and we could lower it to help the system absorb the costs of slower growth, or even if there was worse than slower growth. But from where we sit right now, there is no compelling reason to lower the DSB. The economy is doing better than we thought. The banks continue to deliver very good earnings. They continue to return capital to shareholders at a healthy rate, and that's not a bad thing from our perspective, provided capital remains solid, and it is more than solid right now. So we're in an advantageous position, and that factored into our decision to hold the DSB. And if conditions aren't as advantageous in 3, 6, 12 months, we're prepared to lower the DSB to help the system absorb the costs and just continue to operate. So we feel like the system overall has got the resilience it needs to manage through the uncertainties that are before us in 2026.
Thank you.
Perfect. Thanks, Ian, for your questions. We have perhaps time for 1 or 2 additional questions. I'll just pause in case there are. Again, if you want to ask a question, please raise your virtual hand and I'll call on you. Si vous voulez poser une question, veuillez lever votre main virtuelle et je vous nommerai.
Hi, I don't know if you can hear me. It's Greg Quinn here with Market News. My hand is not working so well. I wonder if I could throw one in.
Absolutely, go for it.
Okay, thank you. One of the issues that people were concerned about not so long ago was the prospect of mortgage renewals. When interest rates had been rising and people with some 5-year loans, there's a suspicion people would run into trouble. Why hasn't that panned out as being such a big problem?
So I think to start, I'd just say delinquencies are up from historic lows, but they are up. So we do recognize that there is some pain out there, and we don't ignore it. But you are right in your broader point, which is certainly delinquencies are lower than they could have been. And generally speaking, folks are renewing their mortgages and staying current. And that's really good news. I think there are a few reasons for that. We've had through B20 for the last 15 years, maybe 13 years, put in place in 2012. B20 has upgraded considerably the underwriting discipline, the day-to-day underwriting discipline in residential mortgages. And it has created a standard of underwriting discipline shared by every institution OSFI supervises. And the accumulation of better underwriting is producing, through a cycle, lower delinquencies, lower defaults. And that's an important factor. I think the other factor that's been important is that the system, part because of systemic data, in part because institutions were alert, have been very aware of the boom in household borrowing in the 2021-22 period, and aware of that boom, both banks and households took precautionary measures in advance of the renewal season, which is beginning in earnest in 2026. And as a result, the vulnerability that we mentioned, or that we've monitored closely, which is folks that have amortization periods 30 years and longer, that contractual, not contractual amortization periods, but effective amortization periods of 30 years or longer. That cohort of vulnerable borrowers is basically cut in half over the last few years, not because of anything OSFI did, but because banks and households were taking proactive actions because they were aware of that risk to lessen their exposure. And so as we head into the next about 18 months, there is a period of much higher renewals. But we are optimistic that the system can process those renewals at a fairly low level of credit costs. Now, there are uncertainties like the pace of the economy and unemployment that could make it worse than we currently have in our baseline forecast. But I guess the most honest thing I can say on that is so far so good, and we are focused on that particular vulnerability quite intently.
Thank you.
All right, perfect. Thank you, Greg. I'm not seeing any other questions or raised hands, so we'll conclude today's briefing. Si vous avez des questions supplémentaires, n'hésitez pas à communiquer avec notre équipe de relations médias. If you have any additional questions, please reach out to OSFI Media Relations. Thank you all for a very engaging Q&A session. Passez une bonne journée.
Merci beaucoup.